Crypto Hotep here with another investing video. We are on week 44 of the family portfolio and dividends tracker. If you're unfamiliar with these videos, feel free to go to my channel, go to week number 1, and that's where I break it all down for you, my methodology, how we chose stocks that are in our current portfolio, and what I am looking to achieve with this. In a quick nutshell for you guys, what we did was I basically shortlisted several stocks for my family to choose from companies that they felt comfortable with. They picked those companies, and then we proceed to use M1 Finance as our broker of choice because with their technology, you can create a big portfolio and then have many sub portfolios within it. So with our big family portfolio, every one of my family members has a sub portfolio with his or her own stock holdings. And then every week we go through this portfolio, we go through balances, dividend activity, different news in the markets, how we feel, and any movements or any sells or buys that we're doing. These videos are for my own edification first and foremost, and they aren't financial advice. But if you like these videos and if you've been supporting the channel, feel free to like, subscribe, comment, let me know what you think, so the algorithm can keep algorithming. That's a word. But as always, guys, we can jump in. But before we go to week 54, we'll go to week 53. So week 53, we saw a dip in the market. The markets have been bleeding as of late. It's been a big correction in the markets. And we did see that last week. Our bounce dropped down below 1900 to 1867.37 with a negative money weighted rate of return of a negative 7.99%, a market gain of a negative $153.62, and dividends earned of $5.98. So this week, let's see what we have here. So this week we are actually above $2,000. I will go into why that is, because we are still in the negative if you look at the money weighted rate of return year to date. Even though it's not negative 7.99%, we're still negative 6.20%, negative gain of negative $121.71, and dividends earned of $6. So what happened here? Okay, so between this week and last week, we'll start at March 26th here. We had a dividend payout from Meta of 1 cent. We'll take that all day. We had our deposits, and then we did have our buys here as well. And with our deposit, we had our regular deposit of $15, and we had 4 buys here. We had Starbucks, Costco, Google, and Target. Okay, and then we also had a great deposit here of $100. Now, if you've been following the channel here, you know that typically our deposits are very low. They're only about $15 every 2 weeks or so. Why? Because we're trying to showcase that you can build wealth over time. All it does, it just takes time. That's all. But when we do, if we are blessed with extra payment, maybe a bonus or anything like that, then I will deposit a little bit more money into the account, which is this prime example here. So we did up our deposit this week by $100, but we still had our $15 deposit, and we had 14 buys now. We went shopping here, and it's pretty fantastic because everything aligned with the dip in the markets currently. So we did buy some Google. We bought Costco, Target, American Express, Tesla we loaded up on, Lowe's, Procter & Gamble, Apple we loaded up on, Pepsi, Amazon, Pfizer, Moody's Corp, Starbucks we loaded up on some Starbucks, and then Colgate. Okay, and let us look at the portfolio balances here. And as always, we go bottom to top. Unfortunately, my wife is at the bottom, and we'll jump right in here. So my wife's balance is $188.27. Year-to-date performance negative 3.06%, market gain of a negative $5.03, with dividends earned of 46 cents. So I will say this: my wife's had a great holding with Celsius. It's been a 180 from the end of last year. So now we're up over 32% on Celsius. Year to date, Pepsi, we're down over about a 0.5%, which I believe was the same percentage that we were down last week as well. And then Tesla, we're actually closing in on Tesla, which is a good thing. So Tesla, we're only down 35%. Last week, we were down over 42%, if you remember, with Tesla. But Tesla did make some gains this week. And based on the charts that I've seen, it's at a key weekly level, Tesla is. And with the certain news events going on with the administration speaking about the new auto tariffs, for any car makers that aren't making cars in the US, all of Tesla's vehicles are in the US. 100% of their cars are made in the US. So that really pumped up Tesla stock. But if you look now, kind of rabbit hole down here, we'll go to Twitter or X, whatever you want to call it. If we look here, since I would say a week and a half, 2 weeks ago, Tesla has had a lot more FUD than normal. If we look here, Tim Waltz made a quick, not funny joke on Tesla and talking about he wanted the stock to drop to give himself a boost. Well, it really didn't happen. And since he made that comment, it kind of had the Jim Cramer effect, where Tesla's actually been up 21% since then. Not only that, though, you've had a lot of vandalizing of those Tesla vehicles currently right now. So again, more FUD on Tesla. A lot of FUD, basically a lot of FUD posts with Tesla as of right now. Kind of the most that I've ever seen before, if I'm being honest here. So just a lot of things going against Tesla in the form of news, posts, and just all around, just quote unquote, FUD that's been going around with Tesla. But again, slowly but surely, we have bought the dip on Tesla. We still believe in Tesla. So not too worried about this percentage that we are down right now. Google down over 22%. I believe that Google is very cheap. There was some news about Google and the thought process of using AI versus using Google to search for things, like using Grok or using ChatGPT instead of Google, which everybody is used to search for things. Me, again, I'm not worried about Google as of yet. I think it's very cheap, a cheap stock to actually have right now. Let's go to our middle stock. Our middle stock year to date, negative 8.24%, market gain of a negative $16.35, and dividend earned of 60 cents, brings the balance over 200 at $213.67. Starbucks were in the green. Costco has flipped green. It was red last week. And then Nintendo steadily holding over 20% Nintendo year to date. Again, Tesla down over 34%, but again, that's better than the week prior. And then Amazon down over 13%, kind of falls in suit with the tech stock kind of bleeding out here. And then Target at a discount, 24.5% down. Let's look at our youngest. We're tightening up on our weighted rate of returns, though, down negative 2.26%. Market gain of a negative $5.35. Dividends earned of 33 cents, and that brings the balance of $258.46 for our youngest. Again, following suit with Nintendo, up over 20%. Starbucks, up over 6.5%. And then again, we got the tech stocks here, and Tesla, Apple down over 12%. I think it's at a discount. That's how I feel about Tesla, how I feel about Google and Amazon. And then Tesla following suit, down over 35%. Okay. And then let's go to my stocks. My stocks, we are down over 2%. Market gain of negative $16.22, and dividends earned of $3.24. That brings my balance of $659.51. As you can see, my tech sector is the one bleeding out the most, down over 16% in the tech sector. Again, some of the names that we just mentioned, in my family members' portfolio: Apple, Google, Meta, Microsoft, Coinbase, one of my beloved stocks here for crypto, down over 29%. Amazon down over 12%. Nvidia over 18%. AMD over 11%, almost 12%. And then AVGO or Broadcom over 26%. Okay, so again, these usually, if you're not accustomed to these corrections or these down points in the market, then the normal investor will get very nervous and very scared of this percentage being down. The funny thing is, I learned crypto before I learned stock investing. And if you know about crypto, you know crypto is very volatile and the swings are very great. And so you could be down 30, 40, 50, 60, even 70 and 80% and come back and make that all up with crypto. And so I say that to say, I'm kind of used to the big draws and the big ups and the downs, and honestly 16% isn't that bad to me. And on top of that, I believe in all my companies that I invest in. I think that's a huge part in investing. You should know what your company does, if you believe in their mission, and you should know how they make money in general. And some of these swings won't hurt as much. The industrials and energy sector, as I've mentioned before, several weeks in continuous, would carry my portfolio, and it is doing just so right here. Our finance sector up over about 0.5%. Consumers and staples down over 2% here. Restaurants and food up over 7%. And surprisingly, pharmaceuticals with Pfizer and J&J up over 5.25%, mainly because J&J is carrying the load here. Okay. All in all, I'm not very concerned about my portfolio. My portfolio looks very good. To me, I'm comfortable with this, and I'm comfortable where the market is currently, and we are still adding, we are still investing, and we will not stop. So let's go to our oldest money weighted rate of return is 11.53, negative 11.53% year to date. Market gain of a negative 78.76%. Dividends earned of $1.37 with a balance short of 700 at $692.59. So again, following suit, Apple down over 12.5%, almost 13%. And then Tesla following suit over 30, down over 30%. Costco almost breaking even here, Costco. But McDonald's holding the fort down, up over almost 6.5%. McDonald's year to date. Okay. And so again, major players, we've seen this simple portfolio with our oldest carry last year especially. I'm comfortable with all of these positions here. So nothing really to say in general, except you will see a lot of volatility in the markets, especially when the markets are playing on every single news or word that the administration says. The markets move very, very fluidly because of this. Again, because I've learned crypto before stocks, I'm used to all this volatility, but there are some people with stocks that have invested in stocks for nearly decades, and they've never seen the market react like this. So the main thing I can say, and it's not financial advice, is ensure that you understand and know the companies that you're investing in and that they have long-term success, right? This is where those long-term companies, especially the dividend companies, hold strong, because whether the market goes up or down, you're still getting paid those dividends unless they cut them. And if the company cuts them that you're investing in, then you shouldn't be investing in them. So with that being said, guys, we will cut the video. We have week 54 at a balance of $2,012.50. And as always, guys, thank you and happy investing.